product base, but it drip though. Pocket fat when the chips low. Alexo, crypto, fit the party like a disco. Fan base like my wallet, yo. Stay true to the digital. Alexo, crypto. Alexo, crypto. Alexo, crypto. Alexo, crypto. What you know about juice? Making the moves. Data flow casual, breaking the news. Revenue proof. A building portfolios taking well over exceptional pain. I'm trapping this game. So participation ain't a hard knock. I put in the work so you got knowledge. You ain't drawing with luck when you following us. The result is a pan full of fat pockets. Bada bang, that's an otter gang with an auto flame. With a lot of hate. Get about the lane, ain't about the trade. Have another trade, get another play. They playing God so pretentious. Grapes in these waters forbidden. Well indeed, that's a felony. Don't look at me, but it's TRB. Have you heard of TRB? I don't know. On the come up, better sit low. The product base, but it drip though. Pocket fat when the chips low. Alexo, crypto, fit the party like a disco. Fan base like my wallet, yo. Stay true to the digital. Alexo, crypto, on the come up, better sit low. The product base, but it drip though. Pocket fat when the chips low. Alexo, crypto, fit the party like a disco. Fan base like my wallet, yo. Stay true to the digital. Alexo, crypto. Alexo, crypto. Alexo, crypto. Alexo, crypto. Alexo, crypto. On the come up, better sit low. The product base, but it drip though. Pocket fat when the chips low. Alexo, crypto, fit the party like a disco. Fan base like my wallet, yo. Stay true to the digital. Alexo, crypto. Alexo, crypto. Alexo, crypto. Alexo, crypto. What you know about juice? Making the moves. Data flow casual, breaking the news. Revenue proof. A building portfolios taking well over exceptional pain. I'm trapping this game. So participation ain't a hard knock. I put in the work so you got knowledge. You ain't drawing with luck when you following us. The result is a pan full of fat pockets. Bada bang, that's an otter gang with an auto flame. With a lot of hate. Get about the lane, ain't about the trade. Have another trade, get another play. They playing God so pretentious. Grapes in these waters forbidden. Well indeed, that's a felony. Don't look at me, but it's TRB. Have you heard of TRB? I don't know. On the come up, better sit low. The product base, but it drip though. Pocket fat when the chips low. Alexo, crypto, fit the party like a disco. Fan base like my wallet, yo. Stay true to the digital. Alexo, crypto, on the come up, better sit low. The product base, but it drip though. Pocket fat when the chips low. Alexo, crypto, fit the party like a disco. Fan base like my wallet, yo. Stay true to the digital. Alexo, crypto. Alexo, crypto. Alexo, crypto. Alexo, crypto. Alexo, crypto. On the come up, better sit low. The product base, but it drip though. Pocket fat when the chips low. Alexo, crypto, fit the party like a disco. Fan base like my wallet, yo. Stay true to the digital. Alexo, crypto. Alexo, crypto. Alexo, crypto. Alexo, crypto.
I have no control. I cannot resist you people on the internet. You people on the internet are too appealing to not hang out with. This show is sponsored by Christmas trees and golden arches. Oh, why don't we get long? Why don't we all just press buy today? Buy, Bitcoin price. Drove my Chevy to the levee, but the levee was dry. What's going on, gang, 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 gang? You guys are all pressing buy, aren't you? I knew you guys were long. Super ofertas. What's going on? I might consider a long here. Let's take a look here. 3-minute time frame, breaking it down. Ooh, nice little double top here. Momentum coming to the downside. I would like to see this momentum broken first. Not trying to buy this down here. 786 bounce. Pretty aggressive. We'll see how the FOMC is going. What's going on, everybody? What's going on? The gang's out here. The gang's out here. Let me know if you are in a long or a short. I would love to know. I'm just here hanging out with you guys, okay? I'm not I can pull up. Do you want me to pull up the Jerome Powell speaking thing? I can pull that up. I think Chair Jerome Powell gonna be speaking. He's gonna be speaking. Hello, Sibel. Hello, Aura. What's going on? What's going on, Matt? What's going on, Tony? Anthony T. Good afternoon, long and strong. Let's go. Slam Banjo, Alexandra G, Ricardo Santiago. What's going on, Slam Banjo? Let's go, Alex. Thank you for everything. Thank you for everything, man. Thank you for being here. Clay the Great. Bay Bafser. What's going on? Stay high. Now I want everybody to guess. What does BAF SR stand for? What is the acronym? What is BAFSR? William Miller, what's going on, CT? Is your short going to play out? We'll have to see. We were looking a little bit higher. We didn't get there. Nice bearish divergence in here. Okay. Down to $131. Let's try to not risk too much on those trades then. $131 you want to probably risk $1.30 on each trade. Would you think that is sufficient? I think so. Can you please pull up the FOMC? So an error occurred. Let me see if it does want to pull up. Live coverage of the
solid answer for him about what the election could mean for the outlook at this meeting.
Matt, appreciate your time, sir. Matt Lazzetti of Deutsche Bank. About 3 minutes ago, until this news conference starts, Rich, you're perfectly placed to answer that question. What would you lead into in this news conference if you were on the other side asking the questions?
Is this on like 100x?
I think I'd ask the chair about financial conditions broadly versus the real funds rate, because it does seem over the last year, the committee at some points emphasizes tighter financial conditions. We saw that explicitly in the statement in both November and December of last year. More recently, they've emphasized, well, look, the funds rate's well above the rate of inflation, but at the same time, financial conditions have been getting easier. And it's not.
Can you guys hear? Is the sound?
One or the other, but get a sense of how he and the committee
is the sound okay? Put a 1 in the chat if the sound is okay, please.
In the U.S. market, in which it's definitely risk on in the last several days, and really for some time now.
I've asked this before, but I think it's so important.
A little bit more? A little bit louder? Is it quiet?
President Trump's going to go. He's going to do that before January, whatever, the inauguration.
No, I don't know.
How goosed is the economy going to be under Trump?
Well, I think there is an element at minimum because we did resolve some uncertainty.
This guy needs to
the extension of the existing. I would again remind you, if we
a
extend
little low. That's what I thought.
It's very expensive in terms of the way it's scored by the CBO, but it doesn't change.
Let me turn it up a little bit for you, beautiful people.
Relative to what they're paying now. I think the regulation, in particular certain sectors, energy and perhaps financial services, is sort of a one-time.
I hear otter noises as well. Team Crypto. I saw that.
I think we are seeing a more or less rational, at least directionality-wise, reaction to markets. And to point on the dollar, strong dollar. I know some would like it weaker, but this is the dollar.
Here's the sum.
Yeah.
So, Bob, final question. We're about 1 minute, 90 seconds away from this press conference. How would you get him to answer something about
What's
his
going
new
on,
balance of
everybody?
risks.
How's it
You know,
going?
I'd asked the question we had gone back
Louder.
and forth on. Ask him, what is your staff modeling now? Because there's the current and
It should be loud enough
expected
now.
set of data, and
Should be
there's
loud
the
enough
majority
now.
probability
Let's
that
pop
there's
up these white
enormous
men.
fiscal stimulus
All
coming
these-
down the pipe
This guy
a
has
year
more
from
chins
now.
than a
What do you
Chinese
model?
phone book. This
This has
guy.
been a fantastic conversation, gents. Bob Michael and the former Fed Vice Chair, Richard Clarida. To the two of you, just absolutely brilliant. Just some takeaways from the last 30 minutes if you're just joining us. Richard Clarida talking
So
about
what's the
maybe finding some
situation here,
space
friends?
to
We got
generate some optionality going into
25 basis
2025.
points
And I
correction.
think some
We're out here,
consensus
you know.
around this table as
Look
well.
at as a community
The
for the
decision
highs
gets
to be
harder
taken here. A
once
little
you get to
sweep of the
December,
lows
but this
coming
one was
down.
an easy one, and
Up
maybe
only,
December
creating a
is a
lot of
tricky one.
liquidity
My
down
big
below.
takeaway is that the Fed removed the
Okay.
reference in their
To
statement
me,
to
this
gaining
is
confidence
this is
on
scary.
inflation.
Like
At
I
the
don't
same
think
time,
I don't know
that
how
our
much
panelists,
more.
our esteemed panelists are talking
Remember
about
Tony
opening the door in
Soprano,
December,
triple top,
either not
Tony
cutting
Soprano,
rates
triple
or
top.
potentially going
Very
forward
much in play
and
right now.
maybe not cutting next year.
Are you ready
Breaking
for a
down,
45-minute
rugging
clinic
everybody.
on how
Okay,
to
so let's
answer
not be
questions? Are you ready for this?
I actually
Too
am so
hasty.
excited.
Is this a certified snooze fest?
No, absolutely not.
let's not be too hasty.
Tension's
Sitting
gonna be
below
pretty wild.
VWAP
I
here.
think it's going to be one of those news conferences, and Mr. Clarida knows this well.
Look at this
where you
coming
have a
back
sheet of
down
paper
in
in front of
here.
you. You've got your notes
Going to
written down, and
Bitcoin,
every time you get that
Ethereum
question,
on a
20
ripper,
different versions
looking
of
good.
it.
Pop
A
cat
sheet of
on a
paper
ripper,
comes
looking
up,
for
and
that
you
to
read it
continue.
verbatim, and hope they get bored of asking.
My favorite
we
is
can-
when they
we can
have
pull up some
multiple
other things.
sheets. When
Let's
Jay
pull up the
Powell has multiple
S&P.
sheets and someone asks a question, you see him going through the papers. Wait, where is? Okay,
The
there's the
S&P is
answer.
on an
Have you ever
absolute
written one of
tear.
those questions, the answer sheets.
The
for
Nasdaq,
chairman?
I participated in discussions of press conference briefings, yes.
25
Nasdaq's
basis
flattening
point
out,
reduction
looking
over at the
looking a
Federal
little
Reserve. Here's the
toppy here on the
chairman, Chair
Nasdaq.
Powell.
How's
My
the
colleagues and I
Dixie? Let's
remain
look at our
squarely
giant
focused on
Dixie.
achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people.
Back
the
to
economy is
Bitcoin.
strong
Bitcoin's
overall
king.
and has made significant progress toward our
5-minute
goals
chart.
over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has eased substantially from a peak of 7% to 2.1% as of September. We are committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal.
I do like to
Today,
swing trade.
the FOMC
Not as
decided
much
to
as I
take
like to
another
scalp.
step in reducing the degree of policy restraint by lowering our policy interest
We're
rate
not
by a
frozen.
quarter percentage point.
We should be good.
We continue to be confident that with an appropriate recalibration of our policy stance,
Everybody's the
strength
stream
in the
okay?
economy
Sound
and
good?
the labor market
Put a
can
one
be
in the chat if
maintained,
it's good, two if
with
it's
inflation
shit.
moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments.
Sounds dovish.
Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has
Resilient.
strengthened.
Resilient.
In
Thank you, Aaron.
contrast, activity in the housing sector has been weak. Overall, improving supply conditions have
Juan
supported the
Soto.
strong performance of the U.S. economy over the past year. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 104,000 per month over the past 3 months. This figure would have been somewhat higher were it not for the effects of labor strikes and hurricanes on employment in October. Regarding the hurricanes, let me extend our sympathies to all the families, businesses, and communities who have been harmed by these devastating storms. The unemployment rate is notably higher than it was a year ago, but it has edged down over the past 3 months and remains low at 4.1%
Talking about
in October.
edging, guys. Be careful.
Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years. Total PCE prices rose 2.1% over the 12 months ending in September, excluding the volatile
Or
food
Chair
and
Powell.
energy categories. Core PCE prices rose 2.7%. Overall, inflation has moved much closer to our 2% longer run goal.
You got bullied
But core
in high
inflation
school.
remains somewhat elevated. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people.
Yeah, I spent like $300 on groceries
We see the risks
other day.
to achieving our employment and inflation goals
Crazy.
as being roughly in balance, and we're attentive to the risks to both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4.5% to 4.75%.
What's going on, Gingerbread?
This
Rambo,
further
good to see you.
recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we move toward a more neutral stance over time. We know that reducing policy restraint too quickly could hinder progress
Bitcoin
on
looks a
inflation.
little bit toppy right now,
At the
guys.
same
so
time,
I want to see
reducing policy
strength.
restraint too slowly could unduly
putting in
weaken
higher
economic
lows, though,
activity
so-
and employment. In
Higher
considering
lows, very
additional
choppy.
adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. We are not on any preset course. We will continue to make our decisions meeting by meeting. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation
What's
is
going
not
on, Mel?
sustainably moving toward 2%, we can dial back policy restraint more slowly.
Alexander G.
If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can move more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Thank you. Given the expectation that the election outcome will produce policies that would meaningfully impact the U.S. economy next year, how is the committee taking these
sounds like a
proposals
white
into
Gina.
account for upcoming
Nope, that's
decisions,
not Gina.
including potentially the next one in December?
Asian
and can
Gina.
you give us any more sense of how proactive or reactive the Fed is prepared to be to changes in economic policies with the next administration?
Sure. So let me say that in the near term, the election will have no effects on our policy decisions.
No worries, Tamale.
As you know, many things affect the economy, and anyone who
just
writes
got
down
home early for
forecasts
taking the kid
in
out,
their
so
job will tell you
got
that
our
the
blood
economy
done.
is quite difficult to forecast looking out past the very near term. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability. We don't guess, we don't speculate, and we don't assume. Now,
was
just in
scripted.
principle, it's possible that any administration's policies or policies put in place by Congress could have economic effects that over time that would matter
Trigger wave
for
down here on
our
Market
pursuit
Cipher.
of our dual mandate goals. So we, along with countless other factors, forecasts of those economic effects would be included in our models of the economy and would be taken into account through that channel.
No trade.
Nick.
Chair Powell, Nick Timrose from the Wall Street Journal. Roughly 1 year ago, when the 10-year Treasury was flirting with 5% and 30-year mortgage rates were near 8%, you noted how higher borrowing costs, if they were sustained, could weigh on economic activity. Given that you've said you believe policy is restrictive and the Fed is now dialing back that restriction, are the growth risks presented by higher U.S. Treasury yields today any different from those you identified 1 year ago when inflation was still meaningfully above your target?
So I would just say this: we've watched the run up in bond rates, and it's nowhere near where it was, of course, a year ago. I guess the long bond rates are well below that level. So we're watching that. Things have been moving around, and we'll see where they settle. I think it's too early to really say where they settle.
Like a really no real decision here. Like
I'm
very
sure
uncertain.
we've all read these decompositions of what
this, we'll see.
And I certainly have, but it's not really our job to provide our specific decomposition. I will say, though, that
What's
it
going on,
appears
Jeanette?
that
Good to see you.
the moves are not principally
How's
about
everyone
higher
doing
inflation
tonight?
expectations. They're
Or
really
today?
about a sense of more likelihood of stronger
Good to
growth
see you guys.
and perhaps
David
less in the
Brumbelow.
way of downside risks. So that's what they're about. We do take financial conditions into account if they're persistent and if they're material. Then we'll certainly take them into account in our policy. But I would say we're not at that stage right now. It's just something that we're watching. And again, these things don't really have mainly to do with Fed policy, but to do with other factors in the economy.
If I could follow up, is the September SEP, are those rate projections still valid? Do they still seem relevant given where we are now?
You get halfway through the cycle between the last set and the next set. I wouldn't want to comment one way or the other. Let's talk about the data we've gotten since the last meeting. So, in the main, the economic activity data have
no
been
longer
stronger
there anymore?
than expected.
No.
The NIPA revision was stronger.
That's not
Certainly
cool.
the September employment report was stronger. The October report not stronger. Retail sales stronger.
That's why
so
we like these
overall,
shows.
though, I think you take away a sense of some of the downside risks to economic activity having
Poor
been
Gina.
diminished with the NIPA revisions in particular. And so overall,
Tom
feeling
Crown's
good
favorite lady,
about
I think.
economic activity. So
Gina.
I think we would factor that in. At the same
Beautiful
time,
Gina.
we got one inflation report, which it wasn't terrible, but it was a little higher than expected. So I think really the question is December, and by December we'll have more data. I guess
Monopoly's
one more
over,
employment
guys. They
report,
don't got
two
any
more
more
inflation
Monopoly.
reports, and lots of
Pretty
other
cool,
data, and
though.
we'll make a
Here's this.
decision as we get to December.
Gina Smilik from the New York Times. Thanks for taking our questions, Chair Powell. When it comes to December, what will you be looking at specifically as you try to make that decision? And then, as of the Fed's economic projections in September, you had written down 4 quarter-point interest rate cuts in 2025. Do you still think that those are likely? Is that sort of the baseline outlook at this point, or has that shifted? And if it shifted at all, can you give a little bit of detail as to why?
I can't. We don't fill out an SEP, and I can't characterize one that wasn't filled out today. So I can't really speak for kind of exactly where the committee is. I will just say for December we're going to be
Behave yourself.
at every meeting. We're going to be looking at the incoming data and how that affects the outlook. As you know, we're in the process of recalibrating from a fairly restrictive level at 5.33%. After today's move, we're down 75 basis points. And we're asking ourselves, is that where we need to be? That we're trying to steer between the risk of moving too quickly and perhaps undermining our progress on inflation, or moving too slowly and allowing the labor market to weaken too much. We're trying to be on a middle path where we can maintain the strength in the labor market while also enabling further progress on inflation. We think that's where we are, but that's the question we're going to be asking in September and in other meetings. And again, I can't really update you on the committee's thinking because we don't fill out an SEP
She's a good wife.
at this meeting.
Yeah, totally appreciate that. I guess when it comes to your own thinking, do you think that a full percentage point of rate cuts in 2025 is a reasonable outlook?
Again, I'm going to wait. We're going to wait and see how things come in December. I mean, it's just. I would put it this way: we're on a path to a more neutral stance, and that's very much
Thank you,
where we're
Dave.
on. That has not changed at all since
Keep
September.
me out of the doghouse.
We're just going to have to see where the data lead us. We have a whole 6 weeks of data to look at to make that decision in December. Obviously, I'm not ruling it out or in, but I would say
little liquidity grabbing here.
I would say that again, we didn't update the SEP, so I'm not going to characterize where the committee would be.
Oh, man.
Thanks, Howard Schneider with Reuters. I wondered if you could please elaborate, explain a little bit the 2 changes in the language of the statement here. in the first paragraph when you say inflation has made progress, dropping the word further progress.
Or progress.
And in the second paragraph, dropping the sentence
That's
that the
it,
committee
Ty
had gained
Fox.
greater
I'm not
confidence that
dead.
inflation was progressing towards its 2% goal. Is there any policy substance behind either of those changes in language? Is it meant to open the door to a December pause? Is it meant to communicate anything about the stickiness of core
Good to see you,
inflation in the
Jeremy.
last
Good to
3
see you,
months?
Fox.
Not really,
Good to see
no.
you,
So
CT.
let me tell you what we were thinking. So
Aaron,
the
Banjo,
test
good
of
to see you guys.
gaining
Thank you for being here.
further confidence was our test for the first rate cut, right? And
Nice bounce here, pushback.
We net that test in September, and
Pushback
therefore
here.
we take that test out. If you leave it in, then it's new forward guidance. It's brand new forward guidance. What do you mean by it? Are you requiring yet further? We have to say
Choppy.
yes or no at every meeting whether we've made further progress. The point is we have gained confidence that we're on a sustainable path down to 2%.
Confidence
So
on a
that I would
sustainable
tell you
path
is-
to
is
2%.
what that's really all about. It's
Really,
not meant
buddy?
to send a signal. Neither of those is meant to send a further signal. And saying further progress, it becomes a test. We don't want to be. We don't think it's a good time to be doing a lot of forward guidance. There's a fair amount of
No
uncertainty in
forecasting.
what I've said. The path that we're on, we do know where the destination is, but we don't know the right pace, and we don't know exactly where the destination is. So the point is to find the right pace and the right destination as we go. And I think there's a
Big
fair amount
wick
of
energy,
uncertainty
yeah.
about that. And you
Coming through.
don't want to tie yourself up with guidance. You want to be able to make sensible decisions as you go.
Steve Leisman, CNBC. Mr. Chairman, you talked about higher rates, perhaps from an expectation of higher growth. You didn't talk about it in terms of expectations of higher deficits. Is that something you think might be behind the recent rise in interest rates, and is that are rising deficits a concern to you?
So we don't comment on fiscal policy, and again, I don't have a lot more to say on what's driving bond yields. In terms of policy changes, though, let me give you a sense of how this works in the ordinary case. Let's say Congress is
Long or short, what do you
considering
think?
a rewrite of the tax
If
laws.
I had to
Doesn't matter
guess
what's
right
in
now,
the content.
50-50
So we would
short.
follow that. At a certain point, we'd think we see the outlines, so we'd start to model it. And then we'd wait, and then at a certain point, the staff would brief the FOMC and say, these are the likely effects. There's lots and lots of literature on the effects of tax policy changes on various parts of the economy. So we'd try to get smart on
ready
that,
to
and then
lift off.
the law
Awesome,
actually
Aaron.
passes.
That's cool, man.
And you'd start to put it. You probably
Hopefully it
run
does.
an alternative simulation before that happens.
Tony's
just,
gonna
just
get
to
you,
keep
man.
people trying
He'll
to understand
delete
it.
your
Then
messages
when it
'cause
actually
he,
passes, it goes into
doesn't
the
need to
model
see AOS in the
along with
chat
a million
100
other
times.
things. So, we have a very large economy. Many things are affecting it at any given time. And a law change of some kind would go in there, but it would go in. But it would, it's a process that takes some time. Clearly, the legislative process
Trying to break this
takes a lot of
downtrend,
time. And of
nothing
course,
yet.
the real question is not the effect of that law.
Nothing yet.
It's all of the policy changes that are happening. What's the net effect? And the overall effect on the economy.
I'm not
at
in
any
any
given time.
trades,
So I think
sir.
that's a process that takes a lot of time. And
I show
that we go through
speed.
all the time with every administration.
Short.
Constantly.
No trade.
And this will be no different. But right now there's nothing to model right now. It's such an early stage. We don't know what the policies are, and once we know what they are, we won't have a sense of when they'll be implemented or all those sorts of things. So I think I would just say we're not doing that now, and all that will take time, and it will be very much regular order when we do that.
If I could just follow up on Nick's question, are the current rates something you feel like you need to lean against in that they go against the direction of policy by adding restriction to the economy, or do you just take them as a given and perhaps a signal that you should do less?
I just think the first question is how long will they be sustained? If you remember the 5% 10-year, people were drawing massively important conclusions only to find, 3 weeks later the 10-year was 50 basis points lower. So, it's material changes in financial conditions that last, that are persistent, that really matter. And we don't know that about these. What we've seen so far, we're watching it, we're reading, we're doing the decompositions and reading others, but right now it's not a major factor.
Russell's down a little bit today. interesting. He's very dodgy today. He's dodging a lot of
Thank
questions.
you, Chris Rugaber at Associated Press.
No very clear, concise
you
questions.
mentioned the positive
okay?
economic data that we've seen since the September meeting.
He's dovish, but he's not
including
forecasting
the revisions to
anything.
things
It's
like
interesting.
savings, higher GDP growth. We saw stock market jump yesterday. That's renewed some of the questions about why do many cuts at all in this with this backdrop.
So you're right. As I mentioned, and as you mentioned, the latest economic data have been strong, and that's, of course, a great thing and highly welcome.
We
But,
should
of
make
course,
an
our
Otter
mandate is
Gang hat,
maximum
an
employment
OG hat.
and price
What do you guys
stability.
think?
And we think that even with today's cut, policy is still restrictive. We understand it's not possible to say precisely how restrictive, but we feel that it is still restrictive. And if you look at our goal variables, the labor market has cooled a great deal from its overheated state of 2 years ago and is now essentially in balance. It is continuing
Labor
to
market
cool,
shit.
albeit at
Just tell it how it is.
modest rate. And we don't need further cooling, we don't think, to achieve our inflation mandate. So that's the labor market. Inflation has moved down a great deal from its highs of 2 years ago, and we judged, as I mentioned, that it's on a sustainable path back
There's
to 2%.
the push break.
So the job's not done on inflation.
There's the break.
If you look at those two things, we judged in September that it was
Retest coming
appropriate to
in.
begin to recalibrate our policy stance to reflect this progress, and today's decision is really another step in that process. Overall,
go.
as I mentioned, we believe that with an appropriate recalibration
That's
of
the
our policy
break.
stance, we can maintain strength in the labor market even
Break
as
continuation.
our policy stance enables further progress toward our inflation goal.
Great. And just to follow up,
Trigger wave
what
confirmed
might
down
cause
here.
you to pause rate cuts in December? What kind of economic data would lead you to that path? Thank you.
So we haven't, made any decision like that at all. But we're in the process, as I mentioned, of
working
moving
on
policy
some-
down, our stance
some
down
Otter
over time to
merch.
more neutral
Not gonna
level.
lie.
And as
For
a
the
general
fam.
matter, as we move ahead, we are prepared to adjust our assessments of the appropriate pace and destination as the outlook evolves. So, for example, if we were to see the labor market deteriorating, we'd be prepared to move more quickly.
Break a structure to the upside here.
Alternatively, as we approach levels that are plausibly neutral or close to neutral, it may turn out to be appropriate to slow the pace
Continuation.
at which we're dialing back restriction. Again, haven't made any decisions about that, but that's certainly a possibility.
Looking for this
you can
now?
think of it as similar to what we do with asset purchase, with asset runoff, with QT. So we reach a point where we slow the pace, much like an airplane reaching the airport slows down. And so we're thinking about it that way, but it's something that we're just beginning to think about.
Edward.
Thanks, Chair Powell. So with the noise in the jobs reports that we've seen, and you look at the Fed's favorite inflation, PCE inflation, overall it's 2.1%, very close to the Fed's target, but core inflation is 2.7%, and it's been that way since July. So why doesn't this data give fuel to a rate pause for this meeting?
Well, so I think if you look at the 3 and 6 month, you're quoting the 12-month. So we look at all of them, right? But if you look at the 3 and 6 month core PCE, you'll see they're around 2.3%. So we look at all of them, and we also look at 12 as well. But what it's telling us is that we really have made significant progress, and we expect there to be bumps. For example,
Go up.
The last 3 months of last year, the core PCE readings were very, very low, probably unsustainably low. So that's why forecasts generally see a couple of upticks toward the end of the year. On the other hand, the January reading certainly looks like an example of residual seasonality, so that we saw last year. So when that falls out of the 12-month calculation in February, we should see a thing down. So it'll literally be a bump up and then down. We understand that. Overall, you see the progress on inflation, and you also look at the economy and you say, what is the inflation story now? Where's it coming from? So I point to a couple of things. One is the non-housing services and goods, which together make up 80% of the core PCE index, are back to the levels they were at the last time we had sustained 2% inflation, which happens to be in the early 2000s for a period of 5, 6, 7 years. So they're back to that level. What's not is housing services. So let's talk about housing services. Housing services is higher. What's going on there is, market rents, newly signed leases are experiencing very low inflation. And what's happening is older, leases that are turning over are taking several years to catch up to where market leases are, market rent leases are. So that's just a catch-up problem. It's not really reflecting current inflationary pressures. It's reflecting past inflationary pressures. So
he's just not projecting anything into the future. I think it's obviously because of presidential.
Look at the labor market, not a source of inflationary pressures. Where's it coming from?
He knows.
It's not a very tight economy. What is the story about inflation? You see that catch-up inflation also in insurance and several other areas. So you're seeing, we're not declaring victory, obviously, but we feel like the story is very consistent with inflation continuing to come down on a bumpy path over the next couple of years and settling around 2%. That story is intact, and it won't be one or two really good data months or bad data months aren't going to really change the pattern at this point now that we're this far into the process.
So you're quickly trying to get to that neutral rate that you see, or do you foresee that you have some time to get there?
Nothing in the economic data suggests that the committee has any need to be in a hurry to get there. We are seeing strong economic activity. We are seeing ongoing strength in the labor market. We're watching that carefully, but we do see maintaining strength there. And so we think that the right way to find neutral, if you will, is carefully, patiently. Again, that's not meant to have a specific meaning, other than to the extent the economy remains strong, we have the ability to take advantage of that as we try to navigate that middle path between the two risks.
Craig.
Hi, Chair Powell. Craig Torres from Bloomberg. 2 questions today. Did you learn anything about what Americans think about the economy from the election results? First question. Second question. I want to talk about some labor market indicators, and I do so with great respect for your attentiveness to the maximum employment side of the mandate, Chair Powell. So the unemployment rate has been at 4% or higher for 6 months. One of the broadest measures of unemployment is up about 0.5 point from a year ago. Compensation gains are sliding back. The quits rate, a signal of labor market dynamism, has been heading down to that bad neighborhood of the 20 teens.
We're all speaking French now.
You have put a marker at Jackson Hole saying
with the
any further cooling
and everything
is unwelcome.
The
it
Canadians
is cooling
have a pump.
Generally a little bit further. So at what point do we reach what you would describe as a shortfall from maximum employment? Thank you.
Sure. So
it's pushing.
On your first question, I'm not going to talk about anything that relates directly or indirectly to the election. On the second one, this is the great question, and it's the one we think about all the time. So I'll just say a couple things. There's nothing really surprising here. What we know is that the unemployment rate is low. We also know that it's moved up significantly. From a year or so ago. So we've seen a big change upward in unemployment. Sometimes that has meant bad things. So far, it doesn't appear to be. It appears that I wouldn't say that the labor market has fully stabilized, because I do think it's continuing to very gradually cool, but it seems to be in a good place. And our policy, of course, is designed to keep it in that good place, to maintain the strength in the labor market while also enabling further progress on inflation. You mentioned a bunch of indicators, and you're right. The openings to unemployment rate is back to a normal level. I would characterize it more broadly as normalizing. You mentioned wages. Wages are still running just a bit above where they would need to be consistent with 2% inflation, unless productivity is going to remain at this high level. If we see productivity, more sustainably at these high levels,
the news is good.
Then that would sustain higher wage gains. So I would say, in fact, you can say it the other way.
It's just
that
he's very
wage increases
indecisive. He's dodging a lot of future questions. 2%
inflation, given current productivity readings. But of course, the lore on productivity readings is whenever you see high readings, you should assume they're going to revert pretty quickly to the longer-term trend. That has always been the case for 50 years. But it may be that we're now 5 years. If you look at the NIPA revisions that came out a month ago,
what's going on, Matt?
We're 5 years into a nice set of productivity readings, which are sustained and very healthy. But overall, it's a good labor market.
Understand.
We could talk about 20
You don't
different data
understand
series.
all English, yeah.
We'll be looking at all of them, of course. But
I don't understand all French, so I'll try my best.
We don't want the labor market to
help you
soften
out.
much from here. We don't think we need that to happen to get
good.
inflation
C'est bon.
back to 2%.
Except he's not answering anything about the future.
Hi, Victoria Guida with Politico.
He's dodging everything.
Some of the president-elect's advisors have suggested that you should resign. If he asked you
This
to
is
leave,
Gina's
would
ugly.
you
ugly
go?
No.
I'm joking. Nobody's
Can you
ugly. This is
follow up on-
Gina's
is-
stepsister.
Do you think that legally you're not required to leave?
No.
Mike?
Michael McKee from Bloomberg Radio and Television. You talk a lot about what the data are
Let's
telling
go.
you and how you are dependent on the data. But in terms of forward-looking assessments of the economy, what are you hearing from CEOs or other officials around the country? What did you hear today from the regional bank presidents about what companies and consumers think about where the economy is going from here rather than looking backwards? And does that match up with what your forecasts have been and what you think the appropriate policy path should be?
Nice push here.
It's hard to characterize a really interesting set of discussions we had. And
A little
of course
bit
you'll see them in
overextended on the 1 minute here.
in 3 weeks. But I would say this: I think the comments from our Reserve Bank colleagues and from the CEOs that they talk to are pretty constructive on the economy right now. Pretty constructive, feeling that the labor market is back to normal, to the point where it's no longer that much a discussion topic in their worlds, whereas 2 years ago it was all they were talking about. So they feel like the labor market's in balance. People feel good about where the economy is. Demand is obviously pretty strong. And you're seeing 2.8% growth in the third quarter estimated. Maybe the year's 2.5%. This is a strong economy. It's actually remarkable how well the U.S. economy has been performing with strong growth, a strong labor market, inflation coming down. We're really performing better
I don't know
than
if
any
we're
of our
going
global
all-time
peers.
highs yet,
And
man.
I
I
think that is
think
reflected
right now,
in what you hear from
break of structure looking strong.
What
Wanna
I
see it
hear
come
people
back in here?
from CEOs. I don't get
Before
to talk to
heading
a
up.
lot of
We'll see.
CEOs in my job, but I hear what others summarize from those.
He's,
And of course, I hear the Reserve Bank
evading,
presidents do a lot of that, and it's pretty
beaucoup de la
constructive overall.
question.
Now, that's not to say there are areas of caution and
But he's still
and things like that, but ultimately, overall, pretty positive.
He's still
To follow up the
optimistic.
areas of caution, if there were black clouds on the horizon that you identified as something you're watching, what would they be?
I think it's things like clearly geopolitical risks around the world are elevated, and just as clearly they've had relatively little effect on the U.S. economy. Now that can change through the price of oil or otherwise, but people talk about those as something that's on the horizon all the time. But ultimately, if you look at the U.S. economy, its performance has been very good, and that's what we hear from business people, and
Up and to the
expectation
right,
that will
baby.
continue.
Let's
If
go.
anything, people feel next year. I've heard this from several people that next year could even be stronger than this year.
Andrew.
Hi, it's Andrew Ackerman with the Washington Post. I just wanted to follow up on the discussion earlier on fiscal policy. Your predecessors, Greenspan and Volcker, spoke up loudly when they thought large budget deficits endangered economic or financial stability. Will you do that too? And right now we're in a period of full employment. We have large budget deficits and debt at historic highs that are rising. Is that something you'd speak out against?
So, I have said many times, no more, no less than what the predecessors you mentioned have said. And what that is that the U.S. federal government's fiscal policy is on an
Casper,
unsustainable
but he got
path.
all
The level
1,200 of
our
us
debt
into a short
relative
at
to the economy is not
76,200.
unsustainable. The path is unsustainable.
What?
And we see that in, you've got a very large deficit at
I mean,
you're at
he
full
didn't make
employment,
anybody do
and
anything,
that's
but
expected to continue. So
you gotta be
it's
careful, man.
important that we, that that to be dealt with. It is ultimately a threat to the economy. Now, I can say that. I don't have oversight. We don't have oversight over fiscal
Can't
policy.
trade for you.
I've said it on many occasions, just said it again.
Okay, thank you. I guess the other question is to follow up on Victoria's question. Do you believe that the president has the power to fire or demote you, and has the Fed determined the legality of a president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
Not what?
Not permitted under the law.
Thank you.
Courtney.
Courtney Brown from Axios. In response to Howard's question, you said it wasn't an ideal time to give forward guidance because of the economic uncertainties. Can you lay out what some of those uncertainties are and whether or not it includes some of the proposals that the president-elect has put out on the campaign trail? Tariffs, for instance?
No, I was not referring to the new administration's policies at all, nor will I today.
Come on.
So what I'm just saying is, as we look ahead, we know, and I mentioned this in my statement, that the risks are two-sided. I guess I should start by saying that we think that the economy and we think our policy are both in a very good place, Very good place.
And,
but as you look forward,
That's
you say,
bullish.
what are the risks? And one risk is that we would move too quickly and find ourselves having moved too quickly, and inflation comes back, and we lost our chance to get inflation back to 2%. So we have to avoid that risk. And that to avoid that risk, that means you want to move carefully. The other risk is that we move too slowly, and that we allow the labor market to weaken too much and do unnecessary damage to the labor market and to people's working lives. That says don't get behind the curve. So these two things are the two risks that we have to manage, and so we're in the middle there. We try to be in the middle and deal with manage both of those. Again, the idea is to support the strength we have in the labor market and in the economy,
Anthony,
but also
and along
with
on Solana, good job.
Somewhat less restrictive, but still restrictive policy, enable
+1
further
magic 8 ball.
progress
Yeah,
toward our
let's go.
2% inflation goal. This is a thing we're meeting by meeting. We're going to be making our assessment of what the right path is. It's not as important. The precise timing of these things is not as important as the overall arc of them. And the arc of them is to move from where we are now to
83 people in
a
here.
sense
Wouldn't mind
of
some
neutral,
likes.
a more neutral policy. We don't know
That'd be
exactly
cool.
where that is. We only know it by its works. We're pretty sure it's below where we are now. But as we move further, there will be more uncertainty about where that is, and we're going to move carefully as this goes on, so that we can increase the chances that we will get it right.
You think? Put a 1 in the chat if you think Trump is going to fire
Thank you, Chair
Jerome
Powell.
Powell.
Simon Rabinovich with The Economist. I know you don't want to share your decomposition of bond yields, but if you look at the break-evens, it is clear that longer-term inflation expectations do seem to have risen.
Thanks, Drew.
Up at about 2.5%, for example, on the 5-year.
You're good, bro. Good to
That's
see
up
you.
half a point from when you cut in September.
No
do you
more
have
than
any concern at all
20 minutes, I'm
that
pretty sure.
longer-term inflation expectations are de-anchoring, or put another way, are anchoring at a slightly higher level? Thanks.
So we would be concerned if we thought we saw longer-term inflation expectations anchoring at a higher level. That's not what we're seeing. We're still seeing, between surveys and market readings, broadly consistent with, I looked at
Not
the
an
5-year,
easy job,
5-year
man.
earlier today, and it's probably moved, but it's kind of right where it's been, and also
said he's
it's
gonna
pretty
fire
close
Gensler. We
to
hope
consistent
so.
with 2% PCE inflation. So that's one that's been a traditional one that we look at a lot. But overall, expectations seem to be, and really have throughout this, in a place that's consistent with 2% inflation. But you're right to say we watch that very carefully, and we will not allow inflation expectations to drift upward. But that's really why we reacted so sharply back in 2022, was to avoid that.
Kelly. Hi, Chair Powell. Kelly O'Grady, CBS News. We just talked about what you've heard from business leaders on the economy, but many average Americans are still not feeling the strength of the economy in their wallets. So what's your message to them on when they might expect relief?
So you're right that we say the economy is performing well, and it is, but we also know that people are still feeling the effects of high prices, for example. And we went through, the
I
world
got you,
went
Tony.
through a global inflation shock, and inflation went up everywhere, and it stays with you because the price level doesn't come back down. So what that takes is, it takes some years of real wage gains for people to feel better. And that's what we're trying to create, and I think we're well on the road to creating that. Inflation has come way down. The economy is still strong here. Wages are moving up, but at a sustainable level. So it's just, I think what needs to happen is happening, and for the most part has happened. But it'll be some time before people, regain their confidence and feel that. And we don't tell people how to feel about the economy. We completely respect what they're feeling. Those feelings are true. They're accurate.
F your
we don't
feelings,
question
man.
them.
You've
we
been
respect
robbing
them.
us for years with your
And
inflation.
just a quick follow-up. President-elect Trump
Sorry, I
has
had to
been
yell
critical
at
of your
him. I had to
performance.
yell at
Any
him.
concern about his influence on the Fed's independence?
I'm not going to get into any of the political things here today, but thank you.
Dodging Trump, orange man.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace.
Wax on.
What is your plan if we start to see
She's mad that Trump's
stagflation?
in. She is definitely mad Trump's in.
Well, so that's
She's mad Trump's in. That
the whole
lady
plan
right there.
is not to have stagflation,
The
so we don't have to
two-tone-
deal with
the
it. So
two-tone
that's
black and
that is
white
actually our
dress.
plan.
She's
it's of course a
mad.
very difficult thing because you're anything you do with interest rates will hurt one side or the other, either the inflation mandate or the employment mandate. I would just say that we've been able to see inflation come down.
I got a great reveal for you guys here.
Lot, much closer to our
I wore
goal
this for you guys.
without the kind of sharp
Okay.
increase in unemployment that has often accompanied programs of disinflation. So, knock on wood, we've gotten this far without seeing a real weakening in the labor market, and we believe we can complete the inflation task while also keeping the labor market strong, and that, of course, is exactly what we're trying to do.
Can you rule out an interest rate hike next year?
No, I wouldn't rule anything out or in that far away, but that's certainly not our plan. I mean, our
Take
baseline
it off.
expectation
I want to
is
see take it off in
that
the
we'll
chat.
continue to
Take
move
it off.
gradually down towards neutral, that the economy will continue to grow at a healthy clip, and that the labor market will remain strong. If you look at our that will not change from the September SEP. That is our baseline forecast, and short of some exogenous event, that will continue to be our forecast for the foreseeable future. So, but ultimately, we're not in a world where we can afford to rule things out a full year in advance. There's just too much uncertainty in what we do.
Let's go to Jean for the last question.
Canada.
Hi, Chair Powell. Jean Young with MNI Market News. I wanted to go back to a comment that you had made about Americans being quite unhappy about the cumulative price level
He
rises over
pisses
the
off
past
the
few
people I
years.
can't stand.
Even though now inflation is back on a path to 2%. Would it be appropriate for the Fed to undershoot for a while on its inflation goal
I got my blood
under
taken
the
today.
average inflation targeting regime so people have a chance to catch up?
No, that's not the way our framework works. We're aiming for inflation at 2%. We did not think it would be appropriate to deliberately undershoot.
Orange man.
And part of the problem there is that low inflation
Putting a
can be a
tariff
problem
on.
too, in a way. But that's not part of our framework, and it's not something we're going to be looking at in our framework review. Thank you very
Leafs,
much,
bro.
An absolutely
Sorry, we beat you
fascinating
4-0,
news conference with
Boston.
Chairman Powell. Where do we start?
Don't
Where
hate.
do we end? A
Without
25
Austin
basis point
Matthews, by the
reduction for
way.
the Federal Reserve, as
Sorry, John.
anticipated,
You
with some
probably are
drama
gonna
over the last
unsubscribe now.
45 minutes or so. Let's start with the equity market. On the S&P 500, we look a little something like this at all-time highs, up 0.8%. On the NASDAQ, we're up by 1.6. At the moment, looking at the Russell, we're up down by about 0.1%. Let's switch it up and get to the bond
Pittsburgh all.
market, and we'll go through these yields. Let's look at yields at the moment, down 6 basis points on 2s and down about 11 on 10s. On the 30-year, we're down about 8 basis points at the moment. On policy, this was really, really subtle. Did they drop all time? Let's
He's gone. He's running. Look.
An
Run.
absolutely
He saw my
fascinating
T-shirt.
news conference with Chairman Powell. Where do we start?
So I don't know. This guy, he's yippee ki yay. So this kind of it's bullish, but it's also like there's no real focus on the future, right? There's like the future's uncertain. We don't know where we're going. We don't know with geopolitical risk. Everybody's going to say geopolitical risk. That's the easy out right now. You can see NASDAQ overextended. Russell's pushing back, swing low. Expansion though. Okay, so a nice move on the Russell. Coming back, right? Flagging out here. I would expect expansion. Small caps here, breaking out, continuing. Okay, NASDAQ up only, really? Like, this is the only concern is like you create liquidity on the way up here. Bitcoin, right? We had that sweep of the low here. No return back into this area down and below. So no trade for me. You can see we're getting a count of bearish divergence here on the 1 minute. You're making higher highs and lower lows. Okay. So up only is it's only going to last so long, right? And when they come down, they come down with an absolute guillotine, right? So right now it's our job as traders to position ourselves to be safe. So right now looking for 76,900, 77,000, let's call it, to be even Steven, okay? But since this morning and even since yesterday, you can see that like price action has really just, pumped, right? Stopped, pumped. So overextended right now, in my opinion. So something I'm not really like, yeah, we could have got long down in here, up to here. That's a nice 1% move that we've had. All right, pushing out here, trying to continue. Maybe it's just the fact that he isn't certain is giving people certainty. You know what I mean? Does that make sense? So nice push out here. Nonetheless, I wasn't about to go long here. We got inverse head and shoulders here pushing us up, right? This is a little bit lower than this one. So this could be your bull div here, pushing you out and continuing upwards, okay? The problem with longing here now is like, where are you going to put your stop? Right here, it's not a great risk to reward area, right? Especially because if I'm forecasting some higher highs here, let's go into our 15-minute. Let's take a look some extension levels. So you can always pull an extension level from the high to the low here. Let's go from up here to here. And you can see we came out to our 272 extension level. Okay, so now in anticipation, we could be looking up here. Up in this area up here. You see the 1618. Let's pull that up a little bit. Psychological $77,000 as well. Okay, you can see we hit our 272 here. We can also go over to this high over here and this low over here. This is going to help you with price discovery, right? We don't have any key levels up in these areas, right? There's nothing up here. This is all brand new up in this world. So you take your fib from high to low and you get some projections, okay? You can also do this with a trend-based fib, but you can see here. So even yesterday, you come into price discovery, right? You come into price discovery, you put in your high, you put in your low, right? You go high to low, boom, boom. You get your 272 extension level. Look at the high. Came in perfectly, okay? So this is how you can really forecast where price is going to go, how to take advantage of it all, yada, yada, yada. Right now, this is looking like a lot of liquidity, in my opinion. A lot of liquidity created to the upside here. So for me, yeah, coming up into this area, quite possible. We'll see how that reacts. And then, I mean, the amount of bear divs are coming in here, it's ridiculous. And there's a lot of liquidity down below. So we should really be looking for shorts, okay? Obviously, the momentum is pretty aggressive, and we don't want to be overextended, caught with our pants down, going long at the top. Like, it's risky, right? It's risky. My next level is 80K-ish. Okay. Short it, says Jeanette. Added another ETH long based on Kyle's trade setup. Yeah, Kyle gave an amazing ETH trade. You guys absolutely crushed that. Building that position in and getting long around $2,400. That was quite amaze balls. Holy balls, as Alexandra G would say. Oh, look at that. Look, all-time highs. We're making all-time highs as we speak. 76,880 coming in, pushing up into our area of resistance right now. We'll see if we do get that that push in or not. Okay, this is a pretty aggressive price action right now. Could have got long, but not something I was interested in. So for me, right now, coming into this area, volume, lower high, short. Okay, break of structure, short. Kind of deal. Coming up into that area as we speak. We'll see if we do get rejected from it. A nice little move here for Bitcoin to the upside, creating a new all-time high at 76,800 and whoop, let's go over it. 890. Wow. Pretty cool. Pretty cool. We're off by $8 so far. We'll see if it does continue to push. An amazing move. I thought I'd just come on here and watch I don't typically do FOMCs, but it's always nice to hang out with you guys. Try to find some trades, yada, yada, yada. I was a bit bored. But that's enough out of me, man. That's enough out of me. We're going to go live tomorrow morning. If you are new here, subscribe. Come hang out in the morning. 8:15 Eastern Standard Time. We'd love to see you guys there. Thank you guys for coming and hanging out. Hopefully you guys enjoyed that. Patience here. Patience, but I'd be looking for a short, a baby short, laddering in. Okay? Yeah. Yeah. Patience will prevail. If there's anything else that I see, I'll definitely be looking at it in the Discord. My guy is live again. Damn. Dude, we never do FOMC. Geo, man. I'm going to have a nap, bro. You guys have a wonderful, wonderful, wonderful day. Geo, you love my t-shirt, bro. Have a wonderful day, guys. Peace.
On the come up, better sit low. The product base, but it drip though. Pocket fat when the chips low. Alexo, crypto, fit the party like a disco. Fan base like my wallet, yo. Stay true to the digital. Alexo, crypto. Alexo, crypto. Alexo, crypto. Alexo, crypto. What you know about juice? Making the moves that'll flow casual, breaking the news. Revenue proof of building portfolios, taking well over exceptional pain. I'm trapping this game, so participation ain't a hard knock. I put in the work so you got knowledge. You ain't drawing with luck when you following us. The result is a pan full of fat pockets. Bada bang, that's an outer game with an auto flame. With a lot of hate, get about the lane, ain't about the trade. Have another trader, get another play. They playing God so pretentious. Grapes in these waters forbidden. Well indeed, that's a felony. Don't look at me, but it's TRB. You heard of TRB? On the come up, better sit low. The product base, but it drip though. Pocket fat when the chips low. Alexo, crypto, fit the party like a disco. Fan base like my wallet, yo. Stay true to the digital. Alexo, crypto. On the come up, better sit low. The product base, but it drip though. Pocket fat when the chips low. Alexo, crypto, fit the party like a disco. Fan base like my wallet, yo. Stay true to the digital. Alexo, crypto. Alexo, crypto. Alexo, crypto. Alexo, crypto. Alexo, crypto.